Well, good afternoon, everyone. This is Scott Thompson from Schwab Coaching, and we are here for our Stock Investing for Beginners webcast. The market is just closed, and we are here for our new time and new day. So I appreciate you making your way over here, and imagine some of you will catch us in the recording or the archive. These sessions are recorded, and so appreciate you joining me today. I've got Barb Armstrong out in the chat. She's one of my great friends and colleagues, and we've got a great story that we may share with you later on. But wanted to just give you a welcome. This is our 17th episode in the Stock Investing for Beginners webcast, but we're just now starting, or if you want to think about it, restarting our lesson 1 in the series today. So the point of this lesson here is really to try to convince you of why to invest or why people invest. And I'm going to share some things with you that I wish that somebody shared with me when I was in 18, 19, 20 years old. And so hopefully that'll be the way to inspire you if you have children or grandchildren that are coming out of college or coming out of high school, and maybe you could share this information with them and help them to have maybe a much more successful future than they might otherwise have. So anyway, again, welcome to our show. Let's go ahead and get started here. Let me just show you our introductory slide here for Stock Investing for Beginners. Let's find out why people invest. But before we do that, let me go ahead and share my disclosures with you, the important information that we have to go over in all of our webcasts. Everything that we talk about today will be for educational purposes only. The different strategies that we talk about, the different stocks that we talk about are not meant to be recommendation. We are going to be introducing what's called paperMoney on the thinkorswim trading platform. I'll show you kind of where to get that information today and where to download that, but realize that there are some significant differences in the paperMoney compared to our live accounts. There are risks associated in investing in dividend paying stocks. So we'll be talking about stop losses in the future as well. There's no guarantee that the stop order will fill at or near the stop price. Also note that a product called Schwab Stock Slices is not intended to be investment advice or recommendation of any stock. There's also unique characteristics or risk associated with partial shares, which is something I'm very excited to show to you today as well. And then remember, all investing includes the loss of risk. So, give a shout out here if you're new. If this is the first time you've come across our webcast, then, let me and Barb know there in the chat. I'll keep an eye on that. Barb does a fantastic job of answering your questions. This is a Stock Investing for Beginners webcast. And so let me show you, this is our lesson series overview page. These are the different things we're going to be talking about over the next 8 weeks. The first one today, obviously, is why people invest, and that's going to be our topic today. But lesson 2 is how to invest in the stock market. Number 3, we're going to be talking about investor psychology. This is something that, again, I wish somebody shared with me in the beginning. Some of the things to expect emotionally and mentally, and some of the challenges that we as traders and the way our brain is wired with investing. I wish I was aware of those things before I got started. So I'll be sharing some of those things with you. And then we're going to jump into basically planning your trade and trading your plan. We're going to go through the steps involved in creating your own investing rule sets. We'll talk about what to buy, when to buy, how much to buy, and then finally how to manage that portfolio along the way, which is really kind of when to sell. So today, again, our topic is why invest. Our agenda for today is we're going to go through why people invest. We're going to talk about how people build wealth through the investing process. We'll talk about some ways that you can get started, and we'll discuss whether that can be today, tomorrow, in a few days, or whatever. But Barb and I chatted. We were at Chicago not too long ago this last weekend. In fact, I saw some of you there. I appreciate you coming up and saying hi to me. Got a picture with a few of you. That was a lot of fun. But we were talking about just some of the things that people need to know about getting started. So let's just jump right in here. I've got a great quote from Charles Schwab himself. In fact, I'll show you where this little video is that I'll be taking this quote from. Great little video to watch here. But let me ask you, Will and Jay Richardson and Kevin Baker and Lawrence and everything, why invest? Why do people invest, or why should someone consider investing? What are some of your ideas? And then I'm going to share a thought or two that Chuck Schwab said. So chat that in there for me, and we'll talk about this. But very first thing is, why be an owner in a company? Essentially, it gives you a piece of the action of what that company is doing. Think of Apple, think of Tesla, think of Microsoft, think of Enron, some of these other ones. There's good and bad, right? When you're doing this. And for a very small amount of money, you can buy 100 shares in a company and have all the benefits of that company growing over 1 year, 2 year, 10 years, maybe 20 years. Now, of course, not all companies do that, and some of them might go down or even go bankrupt. But that investment works hard for you morning, noon, and night while you go about your own profession. And Chuck says that's the great efficiency you have about investing, is you have something that's growing that's not just your time. One of the points that I wanted to make today is we work hard for our money. You know, we spend hours and hours and hours every day, hours and hours every week and month, providing for our families, trying to make a living. And one of the things I want you to take away from this is, how can we now turn the table a little bit and have our money work for us? And I want to show you some of those examples there. Now, I can see some of you are saying, you know, why invest? Generate some income, financial independence, build wealth. These are all great things. Eating is a good thing, right? Eating is good. Not eating, not as good, right? So let's take a look here. Just an example. Now, of course, this is not guaranteed to happen. Past performance doesn't guarantee future success. But this example, man, I wish somebody showed this to me when I first started. And I didn't even really learn about investing until I was like in my 30s. So can you imagine having 10 or 15 or maybe even more years of where someone could get started with their investing? And this is just an example. Look at this example. Maria and Anna each invest $3,000 every year on January 1st for 10 years. And they do that whether the market's up, whether it's down, whether the news is good, whether the news is bad. They just invest consistently every January 1st for 10 years. Now, on the graphic, you can see that one of these bars is different than the other. Maria has a much bigger bar than Anna. Now, what's the difference? What's the difference between these two? Well, Maria started 20 years ago, where Anna only started 10 years ago. Now, not that Anna didn't do a fantastic job. Great for her. But this is just to illustrate that the longer that you have in the market, the more advantages you could have as the market continues to grow. Now, again, there's no guarantee that the market will continue to grow, and there are certainly years that go down, and all of us remember 2008, 2009, when the market got pretty ugly for us. So, but the point is, each invested about $30,000. They invested the same amount, but after 20 years, you see that exponential growth from $37,000 compared to what Anna had to $150,000 or $57,000 in gains. So again, one of the big takeaways, hopefully, that you get from our lesson today is time in the market is one of your greatest assets. And so as you take a look at these different things here, just consider that one fact: time in the market is one of your greatest assets. All right. Now, how do people build wealth through investing? Now, this is, again, something I didn't really understand. You know, if I buy a stock and it goes up, I could kind of get an idea. Okay, great. But I didn't really understand this idea of how people build wealth. So again, we're going to look to Chuck here for a quote. Companies are made to grow. So that in and of itself, I think, is a really important concept that we understand. Companies are meant to grow. One of the things I like to think about is a pie, right? If I have a piece of pie and I get 8 slices out of that, and I want to share that with 8 people, well, how can I get maybe the same slice to somebody else, but it's like 1/10 or 1/20th or something like that? Well, if the pie gets really big, then, you know, that's how I can grow in my wealth and my portfolio. So companies are made to grow. The board of directors always wants the company to grow. Management comes up with a growth plan every single year. If they don't, guess what? CEO gets fired. Boards want the companies to grow, and so who else does? Us, shareholders. When we buy a share, whether it's one share or 100 shares or 1,000 shares, we become a shareholder. And now we have some rights associated with that. And those companies are made to be growth machines. That's what Chuck says. And that was the whole secret behind investing. Now, the companies, successful companies, keep growing, and so does the possibility of their stock price. Now, how many of you have seen that happen before, where the stock price has happened? Now, most all of us have had the experience where we looked at a stock, we saw it trading at $3 or $5, and we thought to ourselves, maybe I should buy that. And then we see the stock grow. How many of you have had that experience, right? Where you didn't buy it, or you thought about buying it, but you didn't. Well, in lesson number 3, that investor psychology, we will talk about why that's a hard decision to make sometimes. And I have some solutions of how to not be so afraid of taking that first step. And I'm excited to share those with you over the next few weeks here. All right. Now, let's take a look at how people build wealth. There's really 2 methods that people build wealth through investing. And I have a kind of a subcategory question here. How do stocks, mutual funds, or ETFs build wealth? Well, there's one, price appreciation. I think that one's very intuitive. If we buy something for $5 and it goes up to $10, we know that that has more value now than it did. Our wealth per se has grown a little bit there in that example. Now, companies that have the stock prices rise might split the stock. We'll talk about that more in just a minute here, and increase the number of shares that you have in your portfolio. But price appreciation is the first way that people build wealth through investing. Any guesses on what the second way is? I have 2 of them that I'm going to show here. And there's probably some other ones and certainly some indirect ways, but what's another way that people build wealth through investing? Any guesses on what the second bullet point is going to be here? Chat that in if you've got that. Dividends. Yes, some of those are dividend payments, and we'll define that here in a second. But dividend payments are another way that people build wealth through investing. And dividends are periodic distribution of corporate profits to the shareholders. So as a shareholder, if a company pays a dividend, now again, got to point this out, not all companies pay a dividend. Not all companies that pay a dividend will increase that dividend, and it's possible that the dividends completely end. So just be aware of that. But those are the 2 ways that people generally build wealth through investing. Now, what is a dividend? Let's just define this. This is stock investing for beginners. I know many of you that are here listening to the webcast right now know the answer to this, but what is a dividend? Well, it's a portion of a company's earnings that's distributed to shareholders, and it's usually in cash. Now, this was a revelation. I remember when I first learned this next principle here, that it's not always cash. Some companies pay stock dividends in what? Additional shares. Now, we refer to that as a stock split most of the time, but they often will call that a stock dividend. And so that's an interesting concept that maybe that's new for some of you there to learn about what a stock split or a stock dividend is. Now, not all companies pay these again, and they can change. So now, how does a stock split work? Now, I'm going to have you guys do some math. I know it's late in the day. It's after lunch. Everybody's excited and tired and ready for work to be over. But let me give you some news here about how a stock split works. And I have a math problem that you have to work with me on here. And we're going to use Apple as our example. Now, Apple IPO'd. That stands for Initial Public Offering. They started trading as a company on December 12th, 1980. And the closing price of Apple, I believe that day was around $22. We're just going to use $22 for our example here. And we're going to walk through kind of how a stock split works. Now, for those of you that have been around for a little while and you're familiar with investing, why do companies split? When their stock, why would they do that? Let's say the stock's trading at $400, $300, $800, $700, $1,500, whatever it is. Why do stocks split? What are some of the ideas that you have behind that? And while you're thinking about that or chatting that in, and I think there's a lot of answers to that, or could be a lot of answers. But for me, as a kind of a new investor, when I first learned about this, it got really hard to buy a stock that was $500, $700, $800, $300. And so one of the reasons that companies will split their stock is to make that price a little more attractive to a broader investing base. And Apple's had a history of doing this. So I want to go through this now. You got your thinking caps on. I want to go through. And the question is how many shares will one share of Apple at 22 turn into after all the splits? Okay. And I did see that there's a survey there in the chat. If you could, maybe click that link and be ready to fill that out at the end, that would be fantastic. I love to get your feedback on there. Got a lot of great feedback from you over the several weeks that we've been doing this. And now that we're starting this new lesson series, I'd love to get your feedback on what you liked and what you didn't like. So please take some time to fill that out for me later on when we're finished up here. All right, let's get back into this. Now, 1980, like 20 years ago, right? Every time I see 1980 in my head, that means 20 years ago, although I know that was a lot longer than that. But June 16th, 1987, Apple split 2-for-1, okay? So what does this mean? Well, if I had one share of Apple in 1980, now I have 2 shares, okay? Now we're going to go a little bit faster here, so you guys need to keep up. Okay, next split was June 21st of 2000, 13 years later. Now, there was a lot of volatility going on with Apple. It would have been really hard, perhaps, to hold through some of the ups and downs from 1980 all the way to June 21st, 2000. But if we did, how many shares now do we have? Well, we had 1. We have 2 now in 1987. If we have 2 and it splits 2-for-1, how many shares do we have then? Well, that's 4 shares. All right. Now, the next split happened on the 5 years later, February 28th, we split 2-for-1 again. All right, now this is starting to get interesting. Our 1 share turned into 2 shares, 2 shares turned into 4 shares. A 2-for-1 split on 4 shares now is how many? 8 shares. Now, how many of you were kind of around the market in 2014? You just weathered the big storm through 2009. The market's been chopping around. 2009, March 12th, I think, was the low or the bottom of that market. In 2009, we started to rally back up, had a little pullback, I think, in 2012, but for overall, got a really strong bullish market. And you may remember Apple just going ballistic in 2014, and they actually split 7-for-1. Okay, now my head just exploded because now I can't do the math in my head anymore. Probably need to write it down on my paper. So I'm not going to quote the numbers anymore. You guys have to work that out yourself. Then the last split that they had, and I've got the little date over here, they split 4-for-1 on August 31st of 2020. So the question again is if I bought 1 share at $22, how many shares do I have today? Okay. Now take a minute. We had a 2-for-1, 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 7-for-1, and 4-for-1 split. And now the question is how many shares is that? So I'll give you a second here to think about that and chat that in. And again, this is one of the ideas. If our portfolio is growing from 1 share to 2 shares to 56 shares and so on, Sharon and Lawrence have the correct answer. That 1 share turned into 224 shares. Now, 224 shares, if the price stayed at $22, that'd still be a pretty good deal, wouldn't it? But where was it? And I took a screenshot on the day that I put this slide together. And on the 6th of June of 2025, this year, the closing price was $203.92. Okay? That means that in this example, and there's no guarantee that this will happen ever again, or that another company would do something similar, and there's possibilities when stocks split, they never recover and keep going down. I've seen that happen in my investing career. But this particular example, we had 1 share turn into 224 shares. The closing price at that time was 203, and I think Apple today closed about $258. So, that's how a stock split works and how it can impact your portfolio. All right. So hopefully you had fun going through that there. And now, one of the questions that comes up to me, Barb, I'm sure gets this when we go to those live events. Again, we were just out there in Chicago, had a great time with all of you. And one of the questions is, is today or now a good time to invest? I think the market may have made a new high today. Apple had, the last, after the split, and I think the high on Apple's like 260, and it closed very close to that all-time high. And so, the question was here that Chuck expresses in this video, so many people come to me and ask, is this a good time to invest, Chuck? And I say, it's always a good time to invest. Just get started. Man, I wish somebody had helped me understand that back in the day. Why is it so important to get started? Now, I like how Chuck explains this. I can't pick the lowest day. So many times we've heard that buy low and sell high. Well, when the markets are trending up, there's another way to look at that. Buy high and sell higher. Okay. There was a year, I think I did a Google search on this a while back, and I think the most new highs that we got in a year was like over 70. So 70 times during that particular year, and I don't remember when it was, but 70 times during that year, the market was making new highs. And we're experiencing a little bit of that. We haven't had anywhere near 70 this year, but once we start making new highs or all-time highs, the next week when it makes another high, that's another new all-time high. So, Chuck's saying, I can't pick the lowest day. I can't even pick the highest day. I just have to pick a day that's comfortable for me and go in and do it. The news might be a little bad that particular day. That's okay. The market might be down. It might be a perfect time to get yourself started and rolling. And then this is important. Okay. If you take nothing else out of this here, please take this away. Be prepared to add to it over your career. I remember when I first started, when I first got married, I was 23 years old and we had no money. There was always more month at the end of the money, right? And it would have been really hard to even pull apart $5 or $10 on a month to pay, to try to invest. And if I understood it a little bit better, I would have done it. But I want you to understand that, one of the best philosophies that I think there is out there is when we are working hard for our money is that, we pay ourselves first. And that's a philosophy where we put something aside, here's the key that would have really helped me. Let's say you put that aside, you take $5 even. You take $5 out of your monthly paycheck and you're going to save that. So you put it in an account and you're just saving it. At the end of the day, even if you have to use that $5 to help meet expenses that same month, the habit that you're creating is now in place. And eventually you'll get to a point where, you set that money aside and you think, what, that $5, I'll just keep that in savings. I don't need to go get that extra cup of coffee this month, or I don't need to buy that extra toy from the store. Okay. But the habit is what's important. Be prepared to add to it over your career. Now, one of the most interesting things that comes up here when we're looking at our investing is how much does it take to get started? And I remember back in the day, it took a lot sometimes. Brent Moore's earlier today in a session that he was talking about, we were talking about odd lot shares, which means you bought something different than 100 shares at a time. And that used to cost a lot of money to do something like that. But, now how much does it cost to get started? Well, the answer is this: zero. It doesn't cost anything to get started. You can open a Schwab account today for with zero money. Okay, you can't trade or invest without money in there, but you can open an account. And guess what? You can also do something else. You can start saving today. You don't have to even do anything. You can put 12 cents on the table and say, now I've started my savings. And I want you to get started. That's another takeaway from our lesson today. Please just get started doing something to help you and your family in the future. Now, that could be investing, could be saving, could be decide to do something, or at least start to make a decision. All right. Now, let me show you how you can really do this with zero. And this is just amazing. This was not available when I first started. I love this feature. You can start practicing today in a feature called paperMoney on the thinkorswim trading platform. And so let me go over here and share, if you go to schwab.com, okay, this will pull up the page, go up here to account and products. That'll give you a kind of a mega nav or a mega drop-down menu here. Thinkorswim trading platform. So let's click that link, and this will give you a whole bunch of information about Thinkorswim. We have a great watch list on our Trader Talks channel. I'll chat this into you right now. But here's our Getting Started with Thinkorswim playlist. We've got 8 great lessons here on Thinkorswim, and you can learn all about it. But you can open an account, and then if you scroll down on this page here, you can download the Thinkorswim platform. And when you download it, you'll get a little icon on your desktop that says Thinkorswim. It'll have this little splat mark logo with, I don't know if they want me to call it a splat mark, but that's what it looks like to me. So I'm going to call it a splat mark there. But that's our little logo. That's the logo on the desktop icon. And then when you click on that, you're going to get a login screen that looks like this. And a couple things I want to point out about the Thinkorswim little login. Down here at the very bottom, you'll notice it says live trading or paperMoney. So how do you get started with zero? Go to paperMoney. They give you $100,000 in paper virtual money to start practicing, to start getting that experience of buying and selling and investing shares and maybe looking at some charts and looking at some prices and everything. But just make sure when you log in that you have live trading or paperMoney. Make sure you're in the right spot there. Okay. Now, Jay Richardson says, is the paperMoney account only good for 30 days? Now, I believe this is how it used to be, is that you could actually download the software and do kind of a practice or let's say a guest account for 30 days, up to 30 days. Now, in order to have it longer than that, I understand that you'd want to open up a Schwab account. Now, again, you don't have to fund it necessarily, but then you don't have that time restriction on the account, Jay. So hopefully that's helpful for you there. And I'm just looking through, see if there's other questions there, but doesn't look like I've missed anything. If I did, just chat that back in for me. All right. Okay, so once you have the Thinkorswim live or paperMoney and you log in, we're going to log into paperMoney. When you've done that, it looks like this. Now, Thinkorswim has a whole bunch of bells and whistles on it. I don't use everything that's available on there, but I do have some great extensive knowledge. Cameron gave you those great webcasts that you can look at there on Thinkorswim. And guess what? You can call the trade desk and they'll help you do this. We have a great group of folks that help people every single day just learning how to use the Thinkorswim platform. So there's lots of different resources that are available for you there. But when you log in, you'll have your monitor tab, and we'll go through this in more detail as we go through. But I just wanted to show you kind of what it looks like on the Thinkorswim platform, and you can actually place some trades here. Now, I'm going to come back to this page in just a second, but I wanted to show you how to find it. Again, that's on the schwab.com page. Just go there at the top, go up to where it had accounts and products, Thinkorswim platform, and then you can download that. All right. Now, let me show you one other resource while we're here. The Schwab Coaching webcast page is we offer over 30 webcasts live every single week. Most of them are going to be recorded, and you can go watch these on demand at any time. But here, if you come down to live webcasts and virtual workshops, scroll down a little bit, and here's today's lineup. Here's our class right here. Tomorrow, Trader Talks in the morning, and so on. All right. But that's on Schwab Coaching webcasts. I'll chat that in here to the link as well, so you can see that. Now, I'm going to go over here. I'm going to do a couple things. I'm going to log into a demo account here on Schwab. And then I want to go over back to the slides for a second and talk about another way to get started. We've covered how to get started. We can do that with paperMoney. Now, if you do want to get started, there's a couple different ways that you can do this. Now, we have, and like I said, we've been doing this webcast now for about 16 weeks. And so I've been actively trading in our paperMoney these plans that I'm going to kind of share with you. I'll share 2 plans or 2 ideas with you today that we've been doing. Then I'll show you on one of them what we've been doing, and the other one I'll have to tell you about. But one way that people can get started is just decide, I'm going to invest $5 per day or $5 per week or $5 per month, whatever you can. And some people will choose like the S&P 500. Now, there's lots of different ways to do that. There's mutual funds or ETFs that do that. What we've been doing, and I give an update on this about every month or two, but we took the concept of investing $5 every single day, and I worked that out to the trading days. There's about 252 trading days in the year. And so if you take $1,825 divide by 252, you get $7.24. And so I've been simulating that $7.24 investment in something that tracks the S&P 500 for the last 17 weeks. Okay. And that's been a fun process. Some brokers actually allow you to do that automatically. Schwab is working on expanding their automated offering, but I'll show you a way where you can actually do the investing at as little as $5 a day if you want. But there's automation coming, and we're excited about that with Charles Schwab. So that's one way that you can do that. And like I mentioned, you can do that weekly, monthly, whatever works for you in your portfolio. All right. The other thing, and this is the thing I'm kind of excited about that I want to show you here in a second, is there's a thing called Schwab stock slices. Now, again, Schwab stock slices not intended to be investment advice or recommendation of any stock, and engaging in the fractional shares does pose some unique risks and limitations. So be aware of that. But what we're doing is kind of our plan, and I will show you what this looks like here in just a second, because I've been doing this for 17 weeks as well. We've been investing $50 in 10 different stocks from the S&P 500 on the first trading day of each week or month. And the way this works is you have to do a minimum of $5 per stock. And again, the product or the thing that's referred to here in the thinkorswim, the feature, the tool is called the Schwab stock slices. And you could do $50 a week, $5 per stock. You could do $5 a month, whatever works for you. But let me show you this. This is really cool. If we go over here to the schwab.com page again, I'm not sure why that came up. So when you're logged into your schwab.com, if you come over here to trade, you'll get this mega nav and come down here to Schwab stock slices. All right. So that's the first thing. Now, if it's the first time that you've logged into this place, you'll get this little tour. And I don't know if you can see it. It's kind of grayed out. But right behind that, if you kind of already shut it down where it doesn't open anymore, you can take the tour and see this. But what I wanted to show you, that great video that Charles Schwab himself did is in this little tour. If you go through these little bullet points here, right there, click, learn some more basic about investing. That's where that little video that Charles Schwab himself did, where I got those quotes that I've shared with you, are located. And you can listen to that, and there's some additional information in there that's really helpful. So, but once you get in here, this is how the Schwab stock slices work. You can choose, and they're expanding this offering too. That should be available probably in Q1 of 2026. But right now, you can choose up to 30 stocks from the S&P 500, and there's a minimum of $5. But the way it works is really simple. Let me go back to the slides here, and I'll walk you through this. Okay. The way you can get started is, go to that Schwab stock slices page, and you select the stocks, and you just click one of these boxes here. We're using the top 10 holdings in the S&P 500, more or less, of the stocks that we chose. But you could do, AbbVie or Airbnb or, any of these. They're all listed alphabetically. And so you check the box of the stock you wish to buy and then click continue. Now, continue's down at the bottom right. I don't have it on my little graphic here, but you can see it, it'll say continue. Once you have a few stocks selected, and these are the ones that I have selected here in our graphic, then you can click review your order, or, put the amount you want to invest. Now, for all 5 or for 10 stocks, you'd have to have at least $50 because it's a minimum of $5 per stock. And then, you review your order, and then you can just send that order. Okay. Confirm the order. This is not, it's not available in paperMoney, but what I've been doing is simulating doing this in the thinkorswim account, which I'll show you in just a second. Okay. But this is a really cool feature. Let me again show you. I know you may have seen me go there, but let me show you how to get there again, just so you're aware. And, this is something that you could start right away as well. So let's say we go back to just, our account summary page. Again, this is just a demo account. There's no money in this one. But go up here to the trade page, click that Mega Nav drop-down menu, go to Schwab Stock Slices. You can take the tour, which I do recommend. That's a great little tour here. And then once you get there, just follow the steps. If you want to check a box, Airbnb, you come down here, click continue. I want to invest $5 because it's just one stock and that's the minimum. Then review the selection, and then it'll allow you to do that confirmation order. Okay. Now here's the fun part. Look at this. If I go to my thinkorswim platform, you can see right here, stock top 10s. These are those top 10 stocks that are in that Schwab Stock Slices. And we've been simulating because it's not something that you can actually do in the thinkorswim platform. You can see it in the thinkorswim platform. If you're doing it in your real account, you can actually see the partial shares, but you can't buy a partial share in thinkorswim yet. So I've been simulating this, and you can see here, this is the quantity. Now, this is not 40 shares. It's 0.4 shares, 0.4, 0.3, 0.18, 0.09, because Costco is so expensive, 0.44, and so on. But let me show you. This is really cool. If you come over here to your P&L open, and I know many of you may have not ever seen thinkorswim before, so this may be very new for you. Again, go watch those videos that Cameron did. But if I go down here and click on my P&L open, you can actually see the days that we've gone in and simulated these partial share purchases. And so we bought 0.02 shares. So like what's that? 200ths of a share on Apple there on the 9th of June when we started this. And you can see that every single week on that first trading day of the month, I go and buy or simulate this in paperMoney and just go in, and I'm just going to scroll down to the bottom because I did this on Monday. Okay, so the 6th, we bought some shares. Now, a couple things I want to point out here as we kind of wrap up for today is, what do you notice over here on our P&L open? Well, some of them are making money, right? Some of them are losing money. Let's take a look at Costco, for example. Costco's, I'm losing $2.21, which I think anybody could handle, but we don't even own a tenth of a share on this one yet. But why are we losing money on this? Well, the easy answer is because the stock price today, the mark price, is lower than when we bought it. So why would somebody do this like every week? What's the advantage of going in every week and trying to do something like this? Well, with Costco, let me show you. If I click on this P&L open, you can see our pricing on Costco. The very first purchase I did on Costco was when it was trading at $1,008. Okay, now it's trading at $936. So this has done nothing but go down. And some of you are saying, well, Scott, why did you just keep buying it? Well, here's the deal. That was the plan. This is called dollar cost averaging. And so now you can see, instead of $1,008 being my average price has actually gone down to $960. So what does that do for us? Well, if the stock starts going back up again, which we all hope, I'm sure it does, then, this 960 hopefully, eventually, will start making some money for us. Okay. Now, on the flip side, let's take a look at Tesla. Tesla is making quite a bit of money relative to these other ones. Not a whole lot of money. It's only $24. But if I click on Tesla, my first purchase on Tesla when it was trading at $2.99 a share, and now it's trading at $4.38 a share. And what's the question that's going to come up? Well, Scott, why didn't you just invest $1 million in Tesla back there in June? Well, number one, I didn't have $1 million. Number two, the plan was to invest $5, every Monday in each of the 10 stocks, and that just is what it is. Sure, I wish I bought more shares there. Okay, I think all of us wish we could go back in time and go maybe buy that Apple stock at $22 a share back in 1980. But the point is we created a plan and we're just following that plan. And that's one of the things, another takeaway from our lesson today is just to get an idea. If you can do nothing else but think about what you could do. Think about your savings. Think about what you could do for investing every month or every week or every day, however you want to do that, whatever works for your schedule. And we'll be going over our portfolio and some of these different plans that we're using over the course of these next 8 weeks. But I wanted to show you kind of in this paperMoney to simulate what could have happened had we done this on the Schwab.com stock slices page. And again, not a recommendation to use that strategy. I just wanted to illustrate a way that people could invest in the market and get started with very little money. When I was younger, 18, 20 years old, I don't think you could have started with $5. I mean, it cost $50 then commissions to do any trading, right? So, very different environment back 20, 30, 40 years ago than we have now. And so there's some great advantages that we have available to us right now. And so I wanted to do that today, go over that. Let me go back to our slides as we kind of wrap up today. So what did we cover today? Well, we covered why people invest. One of the reasons that people invest is they look at it as a way to help them build wealth. And, that may not be the case. In fact, it's possible that the day you start, the market just goes down. In fact, often it feels like whenever we start, right, we start doing something new, the market goes down the next couple of days, right? We talked about how people build wealth. There's 2 ways. Do you guys remember what those were? Price appreciation and dividends. And as part of that price appreciation, we talked about stock splits and how that might work, or, increase the number of shares in your portfolio. We talked about ways that you can get started, and again, if that's just nothing more than deciding, I'm going to start saving some money today, then if that works for you, then, do what would best suit you and your family and your situation right now. Now, I know there's a survey link in here. We talked about that a little bit earlier. Please give me some feedback on what you liked about this particular session, things you'd like to learn more about. We have those 8 lessons that we're going to be going through over the next 8 weeks. Very excited to share all of that information with you. I also, if there was a question that we had in the chat that we didn't get to, what I like to do is I'll take a look at all of the chat comments that were made. And if there's some questions in there that, we want to add some information to, I usually will put those in the comments section of the YouTube. So this should be posted here. And hopefully an hour or so be available to everybody. And you can look at the comments on those on demand. And if there was a question that you may have had that didn't get either a big enough answer or enough answer, or maybe I just completely missed it, I'll try to answer that in the comments and you can go back and read those. But again, take time to fill out the survey. Thank you for being here, Mike and Lawrence and Will and Eva and everybody else that's here. Thank you for taking time out of your schedule to be here with me today. Have a great day and successful investing, everybody. Thank you.